everyone. This week's Business of the Week is featuring Jennifer Grindatto, RBC mortgage specialist. Hi Jennifer, how are you today?
I'm great, Sonja. How are you?
I'm good, thank you.
Thanks for having me.
Thank you for coming. We're just wanting to talk today just to help relieve some of the stress when it comes to a pre-approval process. A few things we'll talk about today, just so that we can touch base on first-time home buyers and also anybody who wants to do an investment property.
Yes.
So maybe if we can start with a pre-approval process. What is that? And really, how do we remove that stress from everybody's situation when it comes to wanting to look for that new property or a first property that they want to buy?
Absolutely. So one of the things that I actually say to my clients when I first meet with them is that I'm actually not necessarily a mortgage specialist. I'm a mortgage specialist, but really I'm a stress remover, because it is a stressful process when you're purchasing a home. And I think one of the things that we want to do is give you as much information that will allow you to make the best decision possible. So with a pre-approval, the importance is to be able to give as much information as possible to me at the beginning. So we'll sit down and we'll go through, what does your income look like? How much of a down payment have you saved? What is your plan for the length of time? So do you have enough money set aside now, or do we need to put a plan in place in order to save for that first property? Whether it's the first property, second property, or 10th property, everybody needs a little bit of a handhold when it comes to putting together a mortgage application. It is not the same as it has been over the last 100 years. The one thing that is continuous in the mortgage world is change. So a couple of years ago, the Canadian government put in place something called a stress test. And the stress test allowed the government to ensure that people were not getting in over their heads. And so when they did the stress test, they put a qualifying rate in place. So a qualifying rate is a rate that's set by the government that allows them to say, if the rates go to that level, would you be able to qualify for the same amount of mortgage that you have today? And it's important for us to look at that because we want to make sure that we're protecting Canadian consumers and keeping them in their homes. So the stress test has impacted what people have been able to afford. It is not the rate that you're given. So that's an important thing to note, is when you have a stress test rate versus the actual rate that you're given, there's a difference in payment. So the difference between a qualifying rate and the actual rate you're given can be 2% or more. And so when you have a conversation with me about what you can qualify for, it doesn't necessarily mean what you're comfortable with in terms of affordability. So we will go through, what can you qualify for? What can you afford? What are you comfortable with? And then we're going to set goals to be able to get you there. So one of the most important things is having a real estate professional that you can work with, like Sonja, that'll allow you to find the right house for you that's within your affordability range. It can be a very stressful process, or it can be very, very simple. And so my job and my goal is to make it as simple as possible for you and just as stress-free as we possibly can.
That's good. So some of the clients that we have, they'll come to me and they'll say, we're looking to purchase a home. We've been pre-qualified.
Yes.
And that does not necessarily mean that they've been approved, pre-approved for that mortgage. What's the difference between the two?
Okay. So when you have a pre-qualification, it essentially means that you have said, I make approximately $75,000 a year. What can I afford? And so person will run some numbers and say, okay, here's your range, or this is what I anticipate that you have in terms of affordability. When you're pre-approved, and that's something that we do at RBC, we pre-approve you based on your income, based on your credit, based on your whole financial picture, including the money that you have for down payment. So this pre-approval that we do is actually qualifying you. You're already qualified. The only piece that we're missing is Sonja to bring the home to us. So we want to ensure that that home has good value. We want to make sure that we can have an appraisal on that house, but you as a consumer are already pre-approved with a credit check and everything that goes along with it. So all documents verified. So big difference between a pre-qualification and a pre-approval. our pre-approvals and working with me, a pre-approval is a firm pre-approval.
So if we have a client that is a first-time home buyer, or even if you're looking for a second mortgage, or as you say, a 10th mortgage, what is the documentation that a client is going to need to make sure that they get that pre-approval process done? Okay,
so it all depends on what your employment situation looks like. So I work with clients that are salaried employees that, have a T4 for the last 2 years, and we're going to look at what's the 2-year average for what they make or their salary, whichever is higher. Or if you're self-employed, we're going to look at your tax returns for the last 2 years. So it is important to have your tax returns filed. Mm-hmm. And then there's also individuals that are retired. So I work with people that are on pension incomes, and maybe we're looking at changing up what their debt looks like on a monthly basis to help them be in a better position to handle their expenses. So every single person is going to have a unique situation. So I wouldn't say that there is if you don't have these documents that you're not going to get approved. Everybody is unique, everyone is different, and so my recommendation is sit down with me and we're going to go through exactly what we can do based on the person that's sitting across from me.
That's great. For those who are interested in looking to invest in their first property, what do they need to know?
Okay, so I think the first thing to think about when you're thinking about buying an investment property is, where is the money for the down payment going to come from? So I talked about briefly having 20% down. Majority of my clients will pull that from their primary residence. So what we tend to do is do a refinance or a moving of their mortgage over to Royal Bank and accessing their equity to be able to apply that as the down payment. So really, if you owned a $500,000 house and you had a $100,000 mortgage left, you could pull up to 80%. So access to an additional $300,000, so $400,000 in total availability with the mortgage you have today, and then apply that to the next property. So you'd have your down payments. If you're buying another $500,000 house, you put $100,000 down, and we have a new mortgage for $400,000. Okay. So really, the key is to be able to use the equity that you've acquired over time on your primary residence to be able to fund your next property. There's also a strategy of people who are looking to buy a new home for themselves, but not sell the one that they have. So they will convert their existing property to a rental property. We do the same thing. We take the equity out of their existing house to put the down payment for their new property, which will be their new family home. We have a lot of these types of scenarios as well. The one key thing that I think is a distinguishing factor for myself and RBC is what we can use for rent, because that's a big piece of the puzzle. Right. That majority of people think, well, I don't have a tenant yet. I don't have rent to be able to use as income for the application. So at RBC, right now, what we can use is 80% of the anticipated rent. So we will appraise the property, find out the value of the property, and find out what the rent will be in terms of when it is actually closed or converted the existing property. What's the rent going to be on that house? And we'll use 80% of that to help qualify for the new place. So really great strategy.
Yeah, that's fantastic.
And be able to use the equity you have, but also what is going to be the anticipated income that you're getting. So it's, again, information that you're getting that is going to help you make the right decision, but also helps you qualify for that new home.
That's amazing. Thank you for sharing that.
Thank you.
Do you have any advice for those who have a few too many different things that they owe money on? How do they consolidate that and move forward if they want to look for an investment property or a new mortgage for another home that they want to buy?
So that's a fantastic question. One of the things that I always recommend, whether you're buying that investment property or you're buying a brand new home, is to take, if you're buying a new home, let's start there. If you have credit card debt or car debt or lines of credit that you may have outstanding, I tend to recommend that we look at what makes sense to pay out from the proceeds of the sale of your house before you buy your new one. Or if we're doing a strategy where we're taking equity out of a house in order to buy an investment property, I look at, well, we're taking the equity out of the house. Let's clean up the cash flow as it is today and put you in a better spot so that the new mortgage that you have is inclusive of all the existing the existing debts that you have currently. So it's again being having a customized solution for a client to allow them to be in the best financial position possible, whether they're just buying their own primary residence or they're buying an investment property. We want to look at the full picture, holistic approach to it and ensure that we've got a good strategy for them and their goals.
Great, excellent. Well, I thank you very much, Jennifer. I appreciate our conversation that we had today. Great information for existing clients and new clients alike. And I thank you very much for your time.
Thank you for having me. I really appreciate it. And of course, we are here if you have any questions. So my contact information will be provided.
Yes.
And, if you need a fantastic real estate agent, Sonja's a wonderful girl and can take great care of you.
Thank you so much.
Thank you.
And that's our Business of the Week.